your conference tonight. Yeah.
Our next speaker is Daniel Reeves. He worked for 35 years at the IRS. He guided the development of the Offshore Compliances Initiative program and led high-profile tax investigations into the cross-border banking practices of UBS, HSBC, and Stanford Financial Group, among others. He will present to us today a presentation called Offshore Tax Havens and the Financial Community that Promotes, Facilitates, and Enables Them. So, Mr. Reeves, the floor is yours.
Okay, well, thank you very much. This is going to be something slightly different from what you've been hearing. Because, first of all, what I'm going to be talking about is not multinational corporations and how they avoid paying taxes in their home jurisdiction. I'm going to be talking about very high wealth individuals, the uber wealthy, the people who enjoy the best that this world has to provide, who live in multiple homes, and they have servants, and they have yachts, and they have planes, which can come in very handy if you know you're booked in an economy fare. And yet, despite all of these great luxuries that they have, and despite enjoying the best that life has to offer, they don't think they should have to pay tax. They think all of you should pay tax. In fact, there's a very famous woman in New York City. Well, she used to be in New York City. I believe she's passed. By the name of Leona Helmsley, who ran a chain of very high wealth luxury hotels, and she was very famous for having once said, "Only the little people pay tax." There was also a great singer-songwriter of the 60s and 70s by the name of Bob Dylan, who once said that the times they are a-changin'. And Bob Dylan was right. By way of a little personal introduction, my name is Daniel Reeves. As was said, I spent 35 years working for the United States Internal Revenue Service as an IRS agent, and at the time of my retirement, which was only in June of this year, I was IRS's Senior Advisor on offshore matters. That means that I bring a different perspective to this group. Previous speakers have been academics, lawyers, policymakers. I'm a law enforcement officer. I'm a regulatory compliance officer. My job was to go out and conduct investigations and to develop ways to find people who were using offshore structures, offshore arrangements to hide their money and not pay their taxes. And what I'm going to do in my presentation is to tell you a little bit about what we learned, how we learned it, what we did with that knowledge, and as has been said, and I say this only because it's part of the presentation, I was the individual who led the UBS investigation and the HSBC investigations and the Stanford Financial Group, that's the Allen Stanford Ponzi scheme. And when I say I led those investigations, I want to be clear, I led the civil investigations that resulted in the issuance of John Doe summonses, that resulted in the piercing of the veil of secrecy surrounding Swiss banking and some other things. The criminal matters were a separate investigation. They were parallel investigations that were conducted by the United States Department of Justice. And when I say parallel, that means that we followed separate tracks. It's very important under U.S. law that that the criminal people and the civil people do not cooperate on investigations, because it can jeopardize the criminal case. So, let me begin by saying that I first began investigating offshore tax matters in 1999. Prior to that, I had spent about 15 years investigating anti-money laundering programs at gambling casinos around the United States. Through that, I also work very closely with our FIU, called the FinCEN, Financial Crimes Enforcement Network, on developing meaningful regulations for the casino industry in terms of currency transaction reporting and also suspicious activity reporting. And we had considerable successes with those efforts. Because of that, in 1999, the IRS decided that it wanted to create a new strategic initiative, a new project that would look for offshore tax evaders. And the reason for that was because at the time, when it came to offshore, IRS was an agency that reacted, as I think many agencies, many tax agencies throughout the world today still react. What I mean by that is that some piece of information would come across someone's desk, and it would indicate that someone might have an offshore bank account. For example, you might be doing an audit of a business, a small business, or a law firm or whatever, and you would come upon a check, and when you turned the check over, you noticed it was deposited into a bank in Antigua. And you would say, well, wait a minute, what is this all about? So we were an agency that reacted to information, and very often when we found someone offshore, it was serendipitous. It was by accident. It was by luck. It was just the way things fell out. But in 1999, IRS, I think very wisely, said, you know, we need to look for ways to proactively identify these people. Let's not wait for something to happen. Let's make it happen ourselves. Let's develop some programs that can be replicated time and time again to go out and identify people who are involved in this activity. And because of my experience in the casino industry, where you are dealing with millions and millions and millions of transactions. I don't know if any of you have ever been into a U.S. casino, a Las Vegas style casino or an Atlantic City style casino. There are literally just millions and millions and millions of transactions occurring every single day. And under the law, how do you identify which of those are suspicious? How do you aggregate those for purposes of cash transaction reporting? And what we did, me and my team, was we went into casinos and we studied the problem and came up with solutions. So they came to me and they said, we would like you to become part of a small group that is going to look at offshore tax evasion. And I became part of a three-man task force, three-person task force, which was made up of myself, a brilliant international agent from New Jersey. I'm not going to give you his name only because I don't know if he wants his name out there. And then an attorney by the name of John McDougall, who became my partner as we moved on with this process. We started by studying the offshore industry because for you to be able to go in and audit a company or to be able to investigate a company, you have to understand its business. You know, if someone is running a pharmaceutical business, you can't go in there without knowing anything about the pharmaceutical industry and do an effective examination. So we decided we needed to learn a lot about offshore tax evasion. We studied the industry extensively. We interviewed many people who were involved in the industry, including a couple who were in prison. We attended offshore conferences where the use of offshore for tax evasion was openly discussed and even encouraged. We met with certain subject matter experts who provided us with the benefit of their extensive knowledge. I'll leave it up to them if they want to say who they are. Jack. And we learned a lot and we gained a considerable amount of knowledge about the industry. The project we came up with ultimately came to be known as the Offshore Credit Card Project. Now, the Offshore Credit Card Project was one that we felt would be easy enough to start in the beginning. It came out of our understanding that there were basically 4 components to every offshore transaction. There are 4 standards. And what we did was frame them as questions. And we said, first of all, how did the person come to be offshore? That's question number 1. Is this something that just they happened to be on a plane and they picked a magazine out of the pocket and there was someone in there talking about offshore? Were they in the Cayman Islands on a vacation and there were signs all over the airport about opening up offshore bank accounts? How did they come to be offshore? And then secondly, once they got offshore, how did they get their money offshore? How did they expatriate it? Third, once the money's offshore, how do you control it? I mean, if your money is sitting in a foreign country, you know, how do you make sure that you control that money? And then finally, how do you get access when you want it? How do you repatriate the money? Those are the 4 essential questions involving offshore. And what we did was to look at them as choke points. These were places where information and opportunity came together. And the reason for the offshore credit card project was because credit cards became a very easy and convenient way to repatriate the money, to get the money when you needed it. All of the schemes that we saw being promoted, all of the conferences would talk about, you set up a bank account, we issue you a credit card, and then anytime you want money, you just go to an ATM and take out the money, or you go to use the credit card to pay for your expenses. But the key is none of these were actually credit cards. They were secured credit cards, which meant that behind every single credit card, there was a bank account. And that bank account had to have enough money in it to cover the credit line plus more. And the reason for that was very simply that if a individual defaulted and didn't pay their credit, how was the bank going to get its money? Well, it's very simple. It's just take it out of the account. All right. So for us, it became a way of identifying people. So if someone had an offshore credit card issued by a bank in a tax haven, and we could find the use of this card, we could identify where these people lived and who they were, we knew instantly, not only did they have an offshore credit card, they had an offshore bank account. And at that point, it's just a matter of detective work. It's the same kind of work that we do on any other audit. It doesn't matter that the money's offshore. There are some challenges brought by it being offshore, but it's the same process. Go get the records, go analyze them, and if you see a credit card and the credit card had, the person only spent $1,000 on the credit card, that doesn't mean there's not $10 million sitting in the bank account behind it. So that became our first project, and it was very successful. It received a great deal of media coverage. In the 1990s, we were on the cover of the New York Times and the Wall Street Journal above the fold, which is important, especially for a tax case. Well, based on that success, IRS, again, I think wisely, and I give them all credit for this as an organization, decided to establish a new national program. And that program was going to be called the Offshore Compliance Initiative. The initiative would be a strategic initiative that would develop other projects and other methods for identifying U.S. persons with offshore tax arrangements, as well as identifying the banks and the attorneys and the accountants and the promoters and all the others who promote, enable, and facilitate this activity. I was put in charge of the design phase of that, if you will. I was not the manager who ran the operation, the day-to-day operation, but I was the one who guided its development and developed many of the strategies and methods that we came up with. What I'm going to tell you is what we learned through all of that research and about some of the successes that we've had because of it. So first, let me tell you something about the business of offshore tax evasion. And make no mistake about it, it is just that. It is a business. It is a huge business. Various estimates have put the loss to the U.S. government alone at between $40 billion and $100 billion a year. Now, in reality, it's very difficult to measure something when related to offshore banking because there are no records to look at. You have no empirical data that can be analyzed. Because after all, what's offshore is about what's off the tax return, not what's on the tax return. And all of these banks are operating in secrecy jurisdictions, so they're not about to tell us how many people are offshore. So it really became a very difficult process to think of other ways that we could look at this. But the recent high-profile investigations of UBS AG of Switzerland, HSBC in India, and the Stanford Financial Group of Antigua have clarified the fact that whatever the amount is, it is huge. They've also shown that there is a considerable offshore financial industry made up of lawyers, accountants, financial advisors, private bankers, and others who knowingly promote, facilitate, enable, and even encourage citizens of other nations to violate the tax laws of their home country. A senior executive at the IRS once said to me after the UBS case, or not after it, but in the midst of it, one of the documents we uncovered was a PowerPoint presentation that had been prepared by an employee, which listed out where all of the accounts were located around the world. And this document is included in the declaration that I filed with the court in Miami. That declaration said that, that PowerPoint presentation said that there were 52,000 accounts, undeclared accounts, held at UBS by U.S. persons. Now, previous to that, the number that had floated around was 20,000. And when that PowerPoint came out showing 52,000, that went viral. This individual came to me and said, you know, up until that I saw that PowerPoint, I thought all these estimates about offshore were probably grossly exaggerated. But he said, when I saw 52,000 at UBS, I started wondering, well, if we add in Credit Suisse and Bank Julius Baer and Wegland and all the other banks in Switzerland, and then we add the ones in the Caymans, and we add the ones in the Bahamas, and Panama, and Hong Kong, and Singapore, you know, those numbers might be pretty accurate or even low. What it did was it quantified we had a serious problem, and that was an epiphany for many people, and for us, what it did is it gave us all of the support we needed to move forward with our programs. And to this day, continues. I mean, my leaving didn't stop anything. Others have just stepped in to fill the void. So what are the tax issues that are involved in offshore tax cases? Well, first of all, offshore tax evasion is all about creating the appearance of international legitimacy while disguising actual beneficial ownership and still retaining personal control, use, and enjoyment of the income or assets. That's what it's all about. And as I said before, this is often aided by a cadre of professionals. Taxpayers will devise schemes that create the appearance of legitimacy, but in substance are really nothing more than shams. You know, yesterday I was intrigued by I'm going to butcher his name, I know, and I apologize in advance, Mr. Arshness, who talked about the duck standard. You know, if it looks like a duck, and if it walks like a duck, and if it quacks like a duck, it's probably a duck. What the offshore industry does is they like to take that duck and paint it green. And then they want to add some long feathers at the end of it, put some feathers on its head, and say it's a peacock. Now, it may look like a peacock, but I'm here to tell you that, by God, it's still a duck. At the end of the day, under U.S. standards, if we can show that the taxpayer has control of the funds and enjoys personal use of those funds, then that equals ownership of the funds. We take what's called a bottom-up approach. We don't look at everything that's on top and try to drill our way down to find out who owns the money. That's too complicated and it takes too long. What we do is we start at the bottom and see who owns the money, who controls the money, who enjoys the money. And when you see an offshore bank account that's allegedly owned by a corporation, but the monies are all being used to pay for children's education and veterinary bills for the family pet and things like that, you can pretty much say, hey, this is your money. Professor Christian, is that right? Made a statement in her presentation earlier about the recognition of the corporate structure and how it has to be done. And we fought a long battle with our own internal people because many of these involve corporate structures, but they're shams. And we were told from time to time, you must recognize the corporation. It is a formal recognition. And we would say, no, it is part of a criminal fraud. And therefore, we think we should disregard it for tax purposes. Not under the disregarded corporation rules related to CFCs and all that stuff. But I mean, we think we should disregard it. And our counsel, to their great credit, took a couple of cases to court on that issue, and we won every one. Since then, we have continued to win every case. We have never lost a court case related to offshore, period. So let me tell you a few things about offshore, and some of this may be repetitive, and if it is, I apologize. I didn't get to see everybody else's PowerPoint before I did this. But hopefully it'll be explanatory and we'll build upon this. But, you know, there are three elements to offshore. There are offshore jurisdictions. They are the ones who offer certain advantages to non-citizens. You heard about this earlier. There are offshore banks who offer services to clients domiciled outside the jurisdiction. And then there are offshore transactions that occur outside the country of residence. But it's really the financial secrecy laws that are at the heart of everything. Financial secrecy affords confidentiality to financial transactions, and this can be either by enactment of law or simply by other means. For example, there are civil laws in some countries that establish banking secrecy. In some places there are criminal laws, such as Switzerland. In Switzerland, it is a criminal violation to release information about clients. Jack Blum had a very famous client named Rudy Elmer, and it's all public, so I can say it, named Rudy Elmer, who presented some CDs to Julian Assange of WikiLeaks, and was promptly arrested by the Swiss government and spent how much time in jail? 6 months in prison. Okay? Criminal violations, and they take it very, very seriously. Other places, it's simply a matter of bank policy or industry practices. Either way, if it's offshore, there are going to be problems in getting it. Now, I want to emphasize here that we're not talking about financial privacy. I'm a big believer in financial privacy. I want my financial matters kept private. I don't want any of you in this room to know anything about how much money I have or how much of it is offshore. I don't have anything offshore. But if I do, you'll never find it. We're not talking about financial privacy. Financial privacy is the right to keep your financial affairs to yourself, to your bankers, to your attorneys. But there is an openness in the event of certain events that allow, through due process of law, certain people to get access to that information. Certainly, if you're in a partnership with someone running a business, and it looks like the partnership may be dissolving, you don't want your partner running off with all the money and hiding it in a bank account where you can never find out. Even with a court order, you can never find out how much money is in that account. That's secrecy. Secrecy is no one will ever know what you have except you and your private banker. And while my business was tax evasion, secrecy allows for all kinds of criminal activity beyond just tax evasion. Some of it the most heinous, human trafficking and all the other stuff that has been referenced by some of the people here in the room. So we're not talking, when we talk about this kind of secrecy, we're not talking about financial privacy. We are talking about absolute financial secrecy. So who are the offshore players? Who are the people involved in this? Well, first it is the offshore jurisdictions, then it is the financial institutions, and finally the offshore professionals. Who are they? Well, the offshore jurisdictions provide the financial secrecy laws. They provide for a low or no tax on the conduct of business that takes place outside their borders. They provide favorable laws for corporations, trusts, foundations, and other legal entities or arrangements. And they work closely with the offshore financial and professional sector. Financial institutions, these are banks, private investment firms, private banks, brokerage firms, insurance companies. They actively promote offshore investment. They assist in the creation and execution of offshore schemes and offshore entities. And when I say schemes, I want to be clear. I'm talking about something that is I won't say fraud, but it's a sham. It's a, I know the term scheme. I was in Great Britain one time and I made a presentation talking about schemes. And apparently scheme is over there used in tax not as being anything nefarious. The scheme is the setup that you have. But to us it means something that is nefarious. They facilitate covert control of the offshore assets and income. And they even provide false documents and false statements. So that if you, that very often what we found was that in some of the Caribbean countries, there were passwords involved. Each account was issued a password. And if anyone wrote correspondence to the bank that did not include the password, then the bank did not reply because they knew that it was probably being written because the IRS or some other agency had asked for the information. So they facilitated that kind of control and secrecy. Offshore professionals include attorneys, accountants, promoters, trust companies and trustees, private bankers, brokers, financial advisors, and company service providers. And it's important to note here that not all of these people have to necessarily be in the tax haven. These people can be anywhere. Many of them are in New York and Chicago and Los Angeles and San Francisco and London and elsewhere. And they are setting up the very structures using offshore entities that I'm talking about. I'm going to show you a couple in a minute. So working with one another, these offshore players create an environment of anonymous ownership of assets and discrete control that allows beneficial ownership of entities to remain hidden. These two concepts are the cornerstone of offshore. So what kinds of entities do get used? Well, the most common forms are the International Business Company, or IBC. An IBC is a personal corporation. It's your corporation. It can be structured in a variety of ways. We've heard talk of nominee directors and such, and it varies according to jurisdiction in some cases. But essentially, an IBC is your personal corporation. It is there not to conduct business. It is there to do one thing, and that is not have you identified as the owner of the assets of the funds. And I'm going to show you how an IBC gets used in a minute. Also, foreign trusts, foreign partnerships, foundations. Foundations are big in Liechtenstein. Personal investment companies. Protected cell companies. This is a fairly new concept. Lee and I and Jack attended this conference in Miami that he referenced a minute ago. And there was a presentation made at the conference about a new concept called a protected cell company. And it was promoted as a way that you can limit your liabilities, but create the appearance that you're actually something much bigger. Think of it as a honeycomb, a bee's honeycomb. You own one little cell. Other people own the other cells. Your liability is limited to the one cell, but the appearance is that you're something much bigger. In insurance, that could be huge. But you can do other things with protected cells. You can buy 2 or 3 protected cells, and you can name one as a consulting business, name another as a legal practice, name another as whatever, and now you can start writing checks out of your business to pay all these business expenses and deduct them on your tax return, lowering your income. And if the IRS ever questions you, I hope I'm not giving people ideas here. If the IRS ever questions you, you're going to have all the documentation you need to support your claim. Why? Because you're going to create it. It's your company. They're all your cells. I can't say the last one. I can't pronounce it, but it's okay. These are used in Mexico to own property, I believe. Correct, Jack? So let's go over the basic structure of how this all works. And I'm talking about for tax purposes now. That's my area. I leave the others to the others. But basically what happens is a foreign taxpayer will go into a foreign jurisdiction and form an offshore entity, usually an IBC. They're cheap to form. They're easy to acquire. They've gotten easier over time. Someone mentioned earlier, I forget who, and I apologize, but the British Virgin Islands, this is like their primary business. The British Virgin Islands is a small island in the Caribbean. I forget how many square miles or kilometers they are, but it's about the size of Washington, D.C. They have a population, I believe, of around 19,000 people, most of whom are involved in the tourism industry. And as of the end of 2007, there were over 900,000 corporations, IBCs, registered there. You could register one tonight from your laptop. They have a portal that you can go in, and it's just like buying something from Amazon.com. You go in and you put in your name and what corporation you want to be known as. You give them your credit card number. They'll charge your credit card number, and very shortly thereafter you have incorporation papers. Now you can go out and open yourself an offshore bank account. And normally what's going to happen is you're going to open up an account. You're going to have one account. This is not required, but it's what we see more often than not. You're going to have one account which is going to be the account that you use for repatriation when you need it. And then all of the other ones are going to go into various investments. Because at the end of the day, you know, you're not going offshore for the interest income, unless you're putting millions and millions offshore. You're going offshore to invest, usually into U.S. securities, because U.S. securities, people who invest in U.S. securities from foreign countries are exempt from tax in the United States. That's like our little tax haven, our contribution to the tax haven world. If you're a foreign national and you invest in U.S. securities, you're exempt from taxation on gains and losses. So guess what? You form an IBC in the British Virgin Islands, and what are you now trading as? A foreign entity. So what happens is you form the corporation opens the bank account, and you're now in business. Now it's just a matter of getting money into the account and getting it out. Very often, a foreign trust will be put over this entire arrangement to further obscure it. You're creating multiple layers of secrecy here. And remember what I said about the top-down approach. If we start at the top and start drilling our way down, what you have to do is you have to look at that trust and find some way to vacate it and say it's not real. Once you get through it, now you've got an IBC. Now you've got to do the same thing with the IBC before you can get to the bank account. And what if the trust was in St. Kitts and the IBC was in BVI and the bank account was in the Bahamas? Now on top of everything else, you've got 3 different legal jurisdictions to fight that battle. It becomes very difficult and very complicated. Ultimately, however, that foreign taxpayer is going to continue to own, control, and personally enjoy all of the funds that are in those accounts. Now, these schemes, this is a simple one. These can get very complicated. This is an actual exhibit from a slide that was submitted to Senator Carl Levin's Senate Permanent Subcommittee on Investigations, related to his a report by his subcommittee called Tax Havens, the Enablers. I forget the name of it now, but it's, you know. And basically what they held hearings, and this particular scheme related to a strategy called the point strategy. Basically a U.S. tax shelter promoter, remember I said they don't have to be in the country, a U.S. tax shelter promoter concocted a scheme that was based on fabrication of billions of dollars of fake securities transactions that were used to generate billions of dollars in fake capital losses that were then used to offset real taxable capital gains of U.S. taxpayers so they could avoid paying taxes in the United States. The point strategy or the point transaction was carried out under secrecy laws with the knowing assistance of trust companies and corporate management companies in the Isle of Man and the Cayman Islands that allowed the true nature of the security transactions and entities to be hidden. Prominent law firms in the United States collaborated with the promoter in the development of the legal basis for this strategy. Prominent U.S. and foreign financial institutions provided the financing, planning, technical assistance for the execution of the transactions, knowing full well that they were designed to avoid paying taxes in the United States. At the end of the day, however, all of the transactions were phony and no real losses were generated. Basically what happened is they set up all of these schemes, and what you see here is all of these are all entities and trusts and things that all of this stuff they were selling to one another, but the only things that really mattered were the Barnville and Jackstone trusts. They were the only 2 real things that existed, and basically what they were doing was trading back and forth. So what would happen would be Barnville wanted to buy stock from Jackstone, didn't have the money, so it would borrow the money from Jackstone to buy the securities and vice versa. And all it did was create phony losses to offset real capital gains and avoid paying tax. In another example of the same hearing, the committee documented how 2 brothers from a very wealthy family in Texas controlled, personally enjoyed, and beneficially owned millions of dollars in securities, real estate, business ventures, art, and jewelry through a single offshore structure, one offshore structure that involved the use of 19 offshore trusts, 39 offshore corporations, and multiple offshore jurisdictions. So when Jack talked earlier about how these white shoe law firms will sit in New York or wherever and come up with all of these strategies. He's exactly right. If the amount of, I've often wondered if the amount that these people pay to their attorneys is more than the amount they save in taxes. I've often wondered that. So what are some common offshore tax schemes? Once you've got this structure in place, the simple structure, I'm going to keep it simple. What are some of the common strategies that people use to move the money offshore? Because that's one of those 4 questions we talked about. Well, first is the use of sham entities to hide ownership of assets. Sham entities are things like these IBCs and these trusts that are not real. They're only set up for purposes of disguising true beneficial ownership. Diversion of income, mirror corporations. Mirror corporations are where you have a corporation, and I'm going to talk U.S. here because I don't know your individual jurisdictional laws, okay? But in the U.S., you could have a medical practice could have an account. They could be incorporated, could be known as Reeves Medical Incorporated. Well, you go to the Bahamas, or you go to the BVI, you form an IBC, and you call it Reeves Medical Inc. Not Inc. Ltd. Limited. So now you've got Reeves Medical Inc., Reeves Medical Ltd. They are mirror corporations. Now when your clients come in and write checks to you, assuming that they write checks, I know checks are going by the way, but assuming that they write checks to you, they just write them out to Reeves Medical. I can deposit some in my U.S. account. I can put the others, bundle them up, stick them in a FedEx, and ship them off to the Bahamas. When the IRS comes in and audits me, I pull out all my bank statements from the U.S. bank account, and guess what? Everything ties perfectly to my tax returns because nobody knows that there's this other account sitting in the Bahamas. Another is offshore merchant accounts. This is one of my personal favorites. There was a mild reference to it earlier, although it wasn't called this. But offshore merchant accounts are where you, if you're engaged in business and you want to accept credit cards and debit cards in your business as payment, and if you're in an online business, you have to. That's the only way you can get paid. What you need is a bank account somewhere that the proceeds of all those, your sales, can be deposited at the end of each day by whoever's doing the processing for your accounts. It may be a big processor like First Data Corporation or one of these, or it could be a smaller company. It could be a bank. It could be anyone. But you need somewhere for it to go. Well, guess what? You form one of these IBCs in BVI, and you're now a British Virgin Islands corporation. And you can open up a bank account and have all of your proceeds deposited into an account there. For purposes of who owns the money, both Visa and MasterCard have regulations that say that the business has to have a merchant account wherever the business is physically located, and in cases of businesses that have no physical location, it is where they are incorporated. Well, where are they incorporated? And you know what's really interesting about that particular dichotomy? An IBC is not allowed to conduct business in the tax haven in which it's incorporated. That's part of the concept of an IBC. It's got to be outside the area. So what you've got is an entity being recognized as being a BVI corporation that's not allowed to conduct business in BVI. So how can it be in the BVI? I mean, it's very confusing. It gets very confusing. There are also various false deduction schemes. There's false invoicing. As I said, you set up one of these protected cells. You call yourself a consulting business. You send yourself a invoice once a month for $10,000 consulting fees. You write a check, pay it, and you deduct on your tax return. Guess what? You're moving $120,000 a year to your offshore bank account and getting tax deductions for it. All right? Re-invoicing is basically a small-scale transfer pricing arrangement. Optometrist who sells glasses buys all of his supplies through an offshore company. He pays $5 for each pair of glasses he buys. Each frame costs $5. Then his offshore company turns around and sells it to his U.S. business, charging $10 a pair. He's moving $5 offshore for each pair of glasses. All right. False loans. People who just have moved the money offshore and then they lend themselves the money. And then when they repay it, they pay interest to themselves, and then they get tax deductions for the interest that they paid. It's not on the screen, but one of my favorites that I ever saw was someone who set up a charitable scholarship kind of program for people who wanted to go to college, where they could apply to this organization and they could get full 4-year rides to college. And the process was you had to apply, you had to write an essay, you had to do certain things, and then the committee would decide who got paid. The only people who ever actually got a scholarship were the 2 daughters of the people that owned all the money. So basically they got to pay for their Harvard education and have all of us law-abiding citizens in the United States pay for it. So what can governments do? When am I supposed to get off? I'm like Lee, I don't know. 2 minutes? Okay, let me wrap it up. What can governments do? Well, first of all, some are obvious. Enhance international cooperation. This was talked about. TIAs, tax information exchange agreements, treaties, mutual legal assistance treaties. All these things are useful. The problem is they all have limitations. Many of the TIAs actually only allow for them to confirm information that we already have in our possession. So if we go to some of these jurisdictions with a TIA request and say we know that this individual has a bank account, here's the account number. They may give us the information on that account, but they won't tell us that there are 3 other accounts owned by the same person at the same bank, and that's where the money really is. Okay? There needs to be better information sharing between agencies, between taxing jurisdictions. There even needs to be some joint ventures. There are certain opportunities where the promoter is located possibly in Norway, and the processor is in the United States, and the bank is located in Germany. Why can't we all work together to stop this, as opposed to fighting territorial battles? Very quickly, since I'm running out of time, I know there's interest in the UBS case. I'll just tell you a little bit about the UBS case. On October 12th, 2007, I first met with a gentleman by the name of Bradley Birkenfeld, who was a U.S. citizen working at UBS in Switzerland. He was in a unique position because he was a U.S. citizen subject to U.S. laws, working at a bank in Switzerland. I interviewed him, and based on his information and other information that we came into possession of, we filed a petition with a court in Miami asking for permission to issue a John Doe summons. John Doe summons is a very unique kind of a tool that we have available to us that allows us to gather information on people when we don't really know what their identities are. The islands like to refer to these as fishing expeditions. That's because they want to try and denigrate it, but the fact is we are fishing in waters where we know there are big fish. And we are presenting that to the court and saying, here's where the big fish are. Can we get a fishing license to go in there and drop our nets in and bring some of these back home? If it's a fishing expedition, and I am a fisherman, I like to go fishing, it's a pretty good one. But there are standards that have to be obeyed. So it was approved by the court. Then in February of 2009, UBS entered into a deferred prosecution agreement with the Department of Justice in which it acknowledged participating in a conspiracy to defraud the United States and IRS of lawful tax revenues. As part of the settlement, they agreed to pay $780 million in settlement charges. They agreed to exit the U.S. cross-border business and provide the U.S. government with the names and account information on certain U.S. clients. 6 months later, well, actually, the very next day, we went to court and filed another petition seeking enforcement of the John Doe summons. That went gangbusters. And 6 months later, in August, literally, I was in court in Miami. The courtroom had as many people as are here, and everyone was a journalist except me and my lawyer. And literally 5 minutes before we were scheduled to take the stand, they announced that a potential settlement had been reached. The nature of that settlement was that UBS and the Swiss government agreed to turn over to us the names and account information of approximately 4,450 high-wealth U.S. clients who, according to the bank's records, had accounts valued at more than $18 billion. The standard was the account had to be owned by a U.S. person, and it had to have more than 1 million Swiss francs in it. The investigations showed clear evidence that UBS was involved in very unusual activity. I mean, it was very much like out of a James Bond novel. They were training their employees to avoid detection, to cross the border, fill out those forms you fill out when you enter a country, fill them out falsely. They carried encrypted laptops. They had secret codes that they used for communications. It was quite interesting. Since that time, IRS and DOJ have continued investigations. In February of this year, the U.S. announced a criminal indictment against Wegland Private Bank, the oldest private bank in Switzerland, that it had helped wealthy Americans hide more than $1.2 billion from the IRS in secret accounts. We've also filed indictments and criminal charges against 19 employees and former employees of various Swiss banks, 5 independent financial advisors and attorneys who assisted them, and 41 U.S. taxpayers who used undisclosed accounts at various foreign banks to commit tax evasion. Interestingly, the criminal charges against Wegland and its financial advisors are against people who actually live and work in Switzerland. They're not U.S. citizens living and working in the United States. And what this has shown is the change in attitudes towards global competition and global law enforcement, in the sense that we have been able to successfully obtain criminal charges against them. Now, granted, we can't go out and arrest them because they're on foreign soil. But if they ever enter the United States, or if they ever enter a country in which we have extradition treaties, they could be facing some serious jeopardy. More important than that, their reputations have been ruined. Anybody who stays with them and lets them continue to control their money is only asking for trouble. Finally, I will just tell you that that we also, in order to deal with the extensive number of cases we expected, we announced a voluntary disclosure program where people could come forward voluntarily and self-disclose the assets. It was not an amnesty program. It's been referred to as an amnesty program. It was not. You did not get amnesty. What you did is you avoided criminal prosecution, and in return you had to pay your tax and your interest for 6 years. There were certain penalties that had to be paid, and you had to pay a one-time penalty equal to it grew from 20 to 25 and then 27.5% of the highest value in the account at any time during that 6-year period. So it was a very no one got amnesty. It was very substantial. I will tell you that as of today, well, not as of today, as of about 2 weeks ago, the Commissioner of IRS, in his departure statement, he has moved on, announced that we are now at 38,000 of those have come in, and we have collected more than $5.5 billion in tax that previously was not collected. More importantly, all of these people are now back in the tax system, and they will be paying their taxes for years and years to come. And more importantly than that, one of the conditions of coming in is that they must agree to, or they must consent to meet with someone who used to be on my staff, no longer, and tell all about who put them there, who helped them, who set them up, how was the whole thing done, and that will just lead to more and more cases. So as I said, Bob Dylan once said, the times they are a-changing, and they are. We're not there yet, but we're getting there. So with that, I apologize, I know I probably ran over, but let me just say that I hope that you've enjoyed it. I hope you learned from it. But what's really important is I hope it helps you as you move forward with doing the very important work that all of you are doing. So thank you very much.